Hello and welcome to another update video about MATIC. MATIC continues to be in the descending corrective price channel. We have overlapping corrective price action, which is good for us because it means it's overlapping, it's corrective, it's at least not really challenging at the moment our scenario, which is overall bullish and in which we are watching for a reaction somewhere in this support area. At the moment, in this trading area, the price dipped into the middle basically of this support area. You can call it trend reversal zone, trading area, whatever. It's a support zone in which ideally in this wave 2 correction, the price finds a footing and will turn around. If not, then the assumption that a third wave to the upside is unfolding or is going to unfold is going to be challenged. So at the moment, however, the market is doing what we want it to do. It shows a first reaction to the support area, but we only see currently a rally in 3 waves. So I want to explain to you what we now need to see to confirm further that the wave 2 is indeed bottomed and that a third wave to the upside has started to unfold, targeting minimally $2.12, better $2.39. Further extensions are always possible, especially in a third wave, and especially MATIC likes to extend to the 1.618, sometimes even the 200% Fibonacci extension. It's too early to confirm that, but so far it's looking good. We have the initial 5-wave move up that we managed to forecast on this channel and that we continued to analyze, obviously, as it was developing. That developed nicely and started obviously in September. We had a nice extended 3rd wave, then a 4th wave and a 5th wave in 3 waves because we're dealing with a leading diagonal in this wave 1. Then we had our wave 2 pullback into the support area. So far in 3 waves. Also, that's what we want to see. The only thing that makes me a little bit hesitant, obviously we're looking for ideal structures all the time because they are the scenarios and the structures that have a very high likelihood of developing. The only thing that would, let's say, for me to give it a second thought, if it really bottomed already, is that this C wave down, so obviously such a wave 2 consists of an A, B, C structure. This wave C didn't really reach the ideal target. Okay, so ideal target would have been the 100% extension level. The reason is we have the wave 1 length, we have the wave 2 to the upside, no, sorry, the A wave length, the B wave, and the target for the C wave is typically the 100% extension of the A wave. At least it's one target, not the only one, and it's not, there's no need to get there. Okay, it's not invalid if it doesn't get there, but still we want to look for what's very likely. So that wasn't reached. However, I have to say that on different exchanges, this move down ends at different levels. So here on the MATIC Coinbase chart, it ends exactly at the 50% Fibonacci level. There are other exchanges I know where that wick wasn't so long. So maybe, you know, that at least reduces the distance of this swing low that was made on the 23rd of January to that 100% extension level. To be honest, I don't care really about it. What really counts is, do we get 5 waves to the upside now before we break below 58.3 cents? Because the 58.3 cent level is our relevant support level on this chart. If that breaks, we have something more bearish going on. If it's holding, all good, the third wave to the upside should unfold. Okay, what do we need to see to confirm that the third wave to the upside is unfolding? So obviously it's dynamic probabilities. They are developing in real time. It's, you know, it's all about the constant assessments of the chart. You know, something that I tell you today, tomorrow, if a micro support level is broken, we might have to adjust the microstructure, but it would likely not impact the bigger picture. So at the moment, it's all about understanding what parameters do the market or does the market need to respect for us to continue to focus on the upside. While at the moment it's too early to confirm a low in place, we can track it and I can give you the levels that need to hold. Okay, so first of all, a good confirmation that really a low is in would be a break out of this corrective price channel to the upside. We are far away from that. It would take a break above around about 80.5 cents. Looking structurally at the chart, you might say, okay, you know, we want 5 waves up, as always, 5 waves up, 3 waves down. You might say someone who's just doing visual assessments of the waves would, and there are enough of them, and it's dangerous, these people might say, okay, I've got a wave 3 here, I've got a wave 4 here, and this is now wave 5. All right, we get 5 waves, great. The problem is, first of all, this third wave doesn't have 5 waves, as you can see, and also it's too short to be reliable. A third wave, even in a diagonal, minimally, would need to reach the 78.7 cent level. That's the 1.236 extension. Better would be the 79.5 cent level, the 1.38 extension. So the work with Fibonacci levels is as important as the work with the visual waves. Obviously, we saw that yesterday when we looked at the Bitcoin chart, the third wave reached exactly the 1.38 extension. So it keeps the bullish scenario alive. That's what we want to see here as well. We want to see that third wave reach that level. Then it needs to hold a fourth wave pullback. The fifth wave would need to reach ideally 81 cents, maybe even higher. So, you know, that's what we need to see. So there could be a pullback before we get the breakout. Ultimately, maybe it could form an inverse head and shoulders pattern, left shoulder, head, and then a right shoulder. We'll see how that develops. But if we get those 5 waves to 81 cents, it would be a first indication, strong indication, that a low is in. Then I'm going to watch for a 3-wave pullback, which I would call an ABC structure, ABC. That at the same time would be a 1-2 setup. The first wave's up, 5 waves, we call a wave 1. The pullback would be a wave 2. No need to label that, but it would be interesting because basically what it would mean is, depending on how high that third wave goes, right? But if it develops anyway. So we would have the potential for an inverse head and shoulders. And there would also be a small head and shoulders pattern up here that would start the pullback, but it's overall part of an inverse head and shoulders, which could lead to a breakout to whatever, $2, $2.50, something like that. That's what I'm observing. They are the parameters I'm checking. And these are what needs to hold. So if the price doesn't even get to 78.7 cents, then I would say, okay, we don't have, there's no chance for 5 waves unless it's very questionable. Now, definitely the level that needs to hold to keep this idea alive at the moment would be the 50% retracement level of the third wave, the currently third wave. So we need to hold currently above 74.4 cents. That's also the wave 1 high. And in an impulse, which might form here, the wave 4 must not cut into the wave 1. So they are the parameters to watch. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.